What's going on, you guys? Welcome to another video by Real FX. In this video I'm going to be teaching you how to spot a reversal using the RSI divergence. Now if that sounds like something that you're interested in, stick around till the end of the video, because along the video I am going to be giving you a free reversal trading strategy. Okay guys, now before we continue, I would like to tell you about Fastbull. Fastbull is the new financial platform that I've been using lately, and I just discovered that this is the best financial platform. Fastbull offers you an economy calendar. Now this economy calendar, you can access it by coming to this economy calendar tab, and the first thing you want to do is to change this time zone to be your preferred time zone. Now on your left here we have the time column. Now this time column shows you the exact time at which a specific event is going to be taking place. Following the time column we have the impact column. Now this impact column gives you an indication of how that economic event is going to be affecting the financial market. 1 star simply means that this is going to have less impact in the financial market, and 2 stars shows that this is going to be having medium impact in the financial market, and then 3 stars shows that it's going to be having high impact in the financial market. And it also offers the actual, the forecast, and the previous data values for these economic events. And this is not only helpful to fundamental traders, but it can also help you as a technical trader to know when to be active in the market and when to stay away from the market. Now if you're interested in this amazing feature along with the best features that comes with Fastbull platform, go ahead and click the link in the description and it's going to take you to this platform. Now Fastbull comes with an app that is compatible with your mobile device. Now I'm going to leave the download link in the description box. Go ahead and click on the link and it will take you to this website, and in this website all you gotta do is to choose your operating system, whether it's Android or iOS, and then it will download the app and you can start enjoying the features of Fastbull. Okay, now let's look at what the RSI indicator is and how we find this RSI indicator. Now the RSI indicator is an indicator that measures the speed and change of price movement. This means that it helps traders identify potential trend reversals and overbought or oversold conditions in the market. Now the way you find this indicator is by going to this indicator tab over here, and then you just type relative strength index or RSI, and then it's gonna show up. You click on it and it's going to be applied here on your chart. Now we're gonna go ahead and remove this yellow line. We don't need this yellow line, so you can go to the settings and then style, and then you can just disable that and then press OK. Okay, now let's look at how this RSI indicator works. Now when this RSI indicator is above the 70% line, it shows that the market is in an overbought state, and when it's below this 30% line, it shows that the market is in an oversold state. Now the idea is that we want to buy when the market is oversold and we want to sell when the market is overbought. But we cannot blindly follow this indicator without any other confluence, because the market can be in an overbought state or oversold state for a very long time. Now to limit the amount of trades that we're going to be taking based on the overbought or the oversold, this is where we introduce the divergence. Okay, now let's look at divergence. What is divergence? Divergence occurs when the price moves in the opposite direction of an indicator, suggesting a potential reversal in the current trend. For example, let's look at this chart here, and if we focus on these two highs created over here, we can see that if we connect these highs, the market is pushing to the upside. If we connect these highs using a trend line, you can see that the trend line is facing upward. But if we go to the RSI indicator and then we connect again these highs, you can see that on the RSI indicator there is a downward move. Now this signifies what? A divergence, and this shows us that the market is about to what? To reverse to the downside. And as you can see here, we did have a reversal to the downside. Again, let's look at another example of a divergence. As you can see here, if we focus on these two lows here, this low and this low, if we connect them using a trend line, you can see that the trend line is facing downwards. And if we go to the RSI indicator and then we connect this low and that low, you can see that the trend line is facing the upward direction. Now this is an indication of a divergence, and this suggests that there is going to be a reversal in the market. And as you can see, we did have that reversal. The market started pulling to the upside. Okay guys, now let's look at how we can combine our divergence with our smart money concepts. Now the first thing we're going to do is to let the whole trend, the current trend, play out. As you can see here, we are having an upward trend. We are breaking structure to the upside. Again, another breakout of structure here, another breakout of structure here, and then we wait for our divergence to take place. As you can see here, we have these two highs here. They are pushing to the upside like that, but when we go to our RSI, we realize that we are making lower highs. We are not making higher highs. Okay, we are making lower highs, not higher highs. Now this is a sign of a divergence. So what we do is we wait for the market to take out this structure over here, and when this structure is taken out, we know that this is a change of character to the downside, like that. So this is a change of character to the downside. We label that, and then what we do is let me change the color to white. What we do is we wait for the market to reverse into a significant zone or a significant area. It can be an order block or a QML, and when the market reaches a significant area, let's say the significant area is somewhere here, that's when we take our trade. Okay, or we can wait for another minor divergence in a smaller time frame and then take our trade to the downside, with the take profit being our previous low. Okay, now let's look at this example that we have on the 15 minutes time frame. Is the GBPUSD chart, and as you can see here, the market was pushing to the upside, and here we had a breakout of structure to the upside. And as you can see on our RSI, the level was around here, the market was around here, and the market came to create again this high over here. However, on the RSI, it created a lower high. So as you can see, this gives us a divergence. That's the first part. If we connect that high and again connect the highs on the RSI, we can see that there is a clear divergence, and then we had a change of character to the downside. That is the market giving us a signal that it's about to push to the downside. And then after that, the market pushed to the downside, and then it gave us a retracement. And then where is our entry? Our entry was going to be on this order block over here. As you can see, it's a hidden order block, and then the market retraced, tapped into our hidden order block, and then started pushing to the downside. The market started pushing to the downside. Now let's go and look for another example. There are many examples like this, guys. Okay guys, now here's another example on the Euro USD. As you can see here, the market was pushing to the upside. We had some sort of consolidation here. This is a perfect supply demand zone, and then the market pushed to the upside, and then it retraced again, created a high. So here we had a breakout structure here. We had a breakout structure, and if we connect these highs here, we can see that we had higher highs. Okay, but if we go to the RSI and then we connect the very same highs, we can see that we had higher lower highs. So this is a sign of a divergence. As you can see, the market then did what? It took out the previous low, creating a change of character, and after creating that change of character to the downside, the market then retraced to react on what? On this breakup block over here. As you can see, the market retraced, tapped into our breakup block, and then it started pushing to the downside. Now let's look at this example here on the GBPJPY. Okay, as you can see, we're going to focus on this low and again this low. So as you can see, we are breaking structure to the downside like that. We're breaking structure, there's a break of structure to the downside, and if we connect these lows, we can see that we are making lower lows. But if we go to the RSI, we can see that here we are making what? Higher lows. So this is a sign of a divergence. Let me just fix this. This is a sign of a divergence. Now when this divergence takes place, we wait for a change of character, and as you can see here, we had that change of character to the upside, and the market then retraced to react on this breaker block over here. So the market reacted on this breaker block here, and then the market started pushing to the upside, creating this breaker of structure. So this is where we could have taken our trade. We're gonna put a buy position here and our stop loss just below this low, and our take profit was going to be that high. So that was going to be our take profit. As you can see, it's a good 1:3 risk reward trade. It's not a bad trade. So let's go and look for another example. Okay guys, so here's another example. As you can see, we are breaking structure to the downside like that. We're breaking structure to the downside, and as you can see, we are having lower lows on the price, but if you go to the RSI, we are having higher lows. Okay, so this is a sign of a divergence, and we wait for a change of character to kick in. And here is our change of character, and where is our trading area? As you can see, in this case, our trading area was the QML. So we had a QML right around this area, which is in alignment with this order block. So this is where we're going to take our trade and then push to the upside. The market started pushing to the upside from there. Okay, so that brings us to the end of this video, guys. If you did enjoy the video, don't forget to like the video, and if you haven't subscribed, don't forget to subscribe, and I'm going to see you guys in the next video.